Welcome back to Kry Finance. Today is August 1st. No, not August 1st. It's October 1st. Ah, ha, ha, ha. Gotcha. No, it's October 1st, and it is a Tuesday. And today we had Iran missile attacks on Israel. So that did some things to the market. We're going to get into that in a little bit. I'm going to be covering the S&P, Carvana, JPMorgan, a little bit more Carvana, a little bit of the S&P again. Then I'm going to be going over Apple, and then we might just peruse the news here a little bit. So let's get right into it. Okay. So we'll start off with the S&P. The S&P continues to just go straight up. This is a monthly time frame, but it is interesting because this is the month of October, and this is the way things look right now. So these are Heikin Ashi candles. So they are a little bit different than regular candles, but they're useful because they show the direction that things are going, and it takes the need for a ton of indicators out of the way. Kind of eliminates that. All right. So we want to look at the S&P here. We can see that we've been really just testing this 5,700 level, 5,700, 5,720, 5,705, whatever you want to call it. We've been testing it, and the market's actually been holding up pretty well. We saw about maybe a little less than 1% of downside today on the market, but you know, it's not really all that bad because yesterday was the end of the quarter. So we closed way up here outside the Bollinger Band, the top Bollinger Band. And that's going to bring us right back down here because these things just don't like to go outside the bands. That's just the way life is. Life is better this way. And so we can, really make a determination on, or a better determination on where things are going to be heading. Now, if you look here, went outside the band, came back down. If you look here, went outside the band, look here, went outside the band, so on and so forth. And the same thing applies for the downside. Went outside the band, or it tested the outside of the band, came back in, came back in, came back in, but ultimately does not like to stay outside the bands. What it really likes to do is just dance on this median line here. And so that's a cool spot to just kind of use as a reference point. Excuse me, a reference point. Get me nervous talking about the S&P. All right, so let's jump into Carvana here. Oh, and something else, before we go into Carvana, I just want to go to the yearly chart here, or I'm sorry, the 1 year chart here, excuse me, and look at the daily Heikin Ashi candles. And I want to point out that we have really two in a row here that are red. And to me, that signifies that we could be seeing some downside here as we go forward into October. Now, if you look back here, the reason why this is relevant is because when you get a handful of these candles, all one color, and then you get about two, usually like two or three, then you start to see some significant or some meaningful trend change here. So again, you get a whole bunch of one color, boom, down. You get a whole bunch of one color, and then this is the new color. So big downtrend, right? Big bunch of red ones, and then change. So 2 or 3 of green, and then we just went straight up. Again, these are daily candles, so you can use this this style of analysis to track the market and kind of get an idea of where it's going to go. Now, again, here we started to tighten up. The range wasn't that big. We went, you could say, yeah, okay, it was a 80-point range or whatever. But if you could determine based on this, I would call this a doji here. You could determine based on that doji that we had kind of flatlined a little bit. And then once you got these red candles here, that would kind of confirm that trend change and bring you to conclude that you should be short. And then you might make some money here, which is kind of cool. Now you would see a double bottom here. You'd see two of a different color here. And that would bring you into this uptrend. Now, again, we have two of a different color. What is going to happen? I guess we'll see. I could be wrong, but hey, that's the market, right? But I've got a pretty good sense of where this is going to be heading based on just that alone. Okay, and just to say also how we were saying before that, or maybe I haven't said it yet, but this trend line here, this median band, is where we're going to kind of revisit always. It might not be right now, but at some point we're going to revisit this band because we are above it. Okay, this median band here. At some point we'll go to this lower band here. This is just the way the market goes. It goes up, it goes down. It goes up, it goes down, right? It just seems to go up a lot more than it goes down. But these lines are important. But don't just throw the lines away. Okay, so Carvana just continues to go up for no reason. You know, the auto industry, we were told, is in shambles, crumbling, horrible, terrible, awful, right? But used autos just continue to climb. So that's interesting. I kind of view this as like a scam index. It's not really, in my opinion, it's like a unicorn company. I mean, cars and vending machines, nobody needs that. Nobody asked for that. Okay, yeah, dealerships can be a little annoying, but you just you got to talk to people. You know, stop. You don't need to make everything streamlined like this. Silly. So yeah, this company will eventually, in my opinion, I believe this company is going to become rotten eggs at some point. But that is just my opinion. It could, it could blossom into I don't know, some AI 3D printing circus entertainment company. I have no idea. This company just goes up for no reason. Nobody really seems to care or ask questions. I did find it interesting that I believe it was the CEO or his father sold like all of his stake in this company. And I'm not talking about sirloin or T-bone. I'm talking about the shares that he had in this company. He totally vacated his position. And so it's interesting. It was around here, if I'm not mistaken. Uh, maybe back here. Really. No. It was before this drop here because that was when they went to 125. So it was back here. And then it dropped. And I thought, well, maybe now that guy's out, now that this thing's got all those shares floating out there, it's going to go down. But no, we just continue to go up. Nice and slow and smooth. Just a nice 50% gain. Really just remarkable. Okay. So, yeah. So we'll move away from that for a minute. I do want to look at Carvana on a seasonal level. I think this is interesting. So now we're going into October. October seems to be Carvana's worst month, but at least in seasonality land. But we are looking at, I'm going to have to reload again. Okay, we are looking at this thing just going straight up so far. Now, again, like we were talking about before, the candles are outside that top band. If we look, I mean, they're just riding that top band, but every time they go outside that top band, they come right back in. So really, really interesting. Again, these are Heikin Ashi candles, so they're going to look a little bit different. But as soon as we get one or two of the opposite color, or I'm sorry, two or three of the opposite color, which is red, we should see this thing start to make some downside, some significant downside, because I think a lot of people are waiting for this to happen, down to this, at least the middle band, which would be this 69 level, 69.14, it looks like. So yeah, the expected drop on this, and again, this chart is going to be off because of, you know, the incredible rally this thing has had, and it really hasn't been around for that many years. So the data is going to be a little bit skewed. However, that being said, you can see that this thing has had some flavor of downside in October. Now, based on this, it would be, you know, it says 50% um, relative to the opening price of the year. Now, if we were to go back here and see what that opening price was, we could kind of get an idea. So that price was about, says here, 39.02. So 50% of that, let's just call it $20. So we could see Carvana drop about $20 if we were to go based off of my wild seasonality, which is why I really don't use seasonality anymore, because these stocks, they're just moving at such incredible rates now. You can't use seasonality the way you used to. At least I can't use seasonality the way I used to use it. But that being said, this seems to be, where are we at here? This one here. This does seem to be Carvana's weakest month per seasonality. So if there was a month to go short, uh, it would, I could see the argument. Let's put it that way. I could see the argument for going short at this time, especially after it was up, I think, like $1 or $2 today. Okay. So let's see, we're 12 minutes in. Let's kind of start wrapping things up. I want to make today's video a little bit shorter than yesterday, because yesterday was like 22 minutes and I don't think anyone sat through the whole thing. Okay, so the S&P seasonality, same story. We're just going to kind of look at this and smile, because we know the market doesn't go up 8.5% or 9%, excuse me, every year. It goes up on average 9%. And again, this is over the past 20 years, this data. But you know what? I mean, the S&P, like I said yesterday, I actually ended up doing the math, and it is up like, well, at least based on yesterday's close, it's up like 37 or 38% on the year, which is just so crazy to think about. I never thought I would be able to say that out loud, but yeah, just a wild time to be alive in this market. But you can use, the main point I wanted to say is that you can use seasonality to your advantage if you do feel a little bit lost as to where the markets are going to go. Now, I would argue that this is pretty spot on here for February into March. Not relevant to us now, but February into March going down is it's a pretty accurate representation of seasonality here. Now, it looks like if we wanted to consider this for October, it looks like that the beginning of October, we see our bottom, and then we just go up from there about 3.5%. Now, if that happens, bravo. But actually, it could be more. It could be like 5%. But I try to round down on these things, because you can't be too generous with your expectations. If you're too generous with your expectations, you'll never take profit, and you'll just be miserable. Just waiting for some magic number to show up, which is never going to happen. So we have to be less than realistic in a negative way, so that way we under promise and over deliver, rather than over promise and under deliver. Okay, so Apple, according to this, goes up basically straight up all the time, 50% every year. So again, this is why seasonality is kind of just out the window for me, because it just, I mean, come on, is Apple really doing 50% every year? And if they are, I mean, hats off to them, but wow. I mean, you're trying to tell me they never go down, like ever? So that's something to talk about. If you look at the Apple chart, I mean, these are monthly candles. Yeah. I mean, what we've had, let's see, three, four. Back in 2022, they had a rough year, but if you omit 2022, I mean, they've really only had, what is this? 10, maybe 13, 14 red candles on the monthly since like 2018, it looks like. Then before that, that would be only like 15 red monthly candles. So we basically had like 7 years with only maybe a year and a half of those candles. So like I said, like 16 candles out of 60. So like 20, a little more than 20% of the candles were. I'm probably getting mixed up with my numbers here, but it's really, the bias is green here. So the seasonality, it makes sense, but wow. I mean, if the again, just like with Carvana, if there was a time to go short, not based on seasonality, because we do see this jump here as per seasonality, but we are, let's see, here we go. We are close to this top band. Now, if we go back, you might say, well, that's a little crazy to be using um, the monthly interval. But, even if you look at the weekly, if I just reload this, even if you look at the weekly, oh, well, we did test this median band here. See, this is interesting. We did test that median band exactly, and then we bounced off of it. I'm not up to where we are here. Now, we did retest it again here. Again, these are on weekly time frames, weekly intervals. And so it is interesting to dive into the charts like this. But Apple, as per seasonality, it's almost unshortable. But for right now, if we were trying to look in the present time and just see, the immediate future, what this thing holds, it is tough. But when you see a big drop like this, I think the narrative was iPhone demand is going to slow. We've been hearing that one for years. I actually have a text back and forth with a friend of mine, and the amount of times that I've texted him iPhone demand set to slow over the last, I don't even know how many years, it's pretty funny. And clearly, it doesn't matter to Apple. Okay. So we've kind of made it full circle back to this. This is just Bloomberg with the top news. So it's kind of silly to me, and somebody might get upset about that, but I'm just here to talk about the market. I'm not here to talk about politics, but you know, this missile attack and the market dropping in response to it, to me, are we really going to go down because of a missile attack? We've seen so many missile attacks between different countries, and so many so many different world events that have raised the VIX just short term, and these things always seem to just kind of go off into the sunset. I mean, the Russia-Ukraine war, you couldn't get away from it, but now they want to talk about Iran and Israel and all that jazz, and we hear nothing really about the Russia-Ukraine war. I mean, it's really just, like I said yesterday, these news outlets, they're going to put a lot of spin on these articles. Look here, don't look over there, look here. So what are we really missing here? What are they trying to divert us from? Probably the election, which is down here. And again, I said I wouldn't make it political, but you can't ignore that the election is coming up. We do only have a handful of weeks before that election takes place. So we should, going back to the S&P, we should see some volatility coming up in this market because there's a lot of uncertainty. I mean, how much of the polls you believe is one thing, but the way the media is spinning this is that it's a close race. And so, unfortunately, it has to be traded that way. And because it has to be traded that way, as per the media, uh, it should be volatile. But we'll see. It may not be volatile. It may be just water under the bridge and nobody cares. But it's just looking at this chart, and we've got those two red Heikin Ashi candles on the 1-day interval. It really tells me that there's a strong possibility that this index, at least this index, can drop uh, a good, a significant amount of points. But we'll see. The first level would be this 5628 area, and then the next level, if you're just talking about the bands, because you could have something like this here where it drops below the median and it comes down to this lower end and then retests the median and goes back down to the lower band. So there could be some business in here. Okay, we could drop below this median band and do a little dance in here and come back up to the median band and then drop, or we could just go straight down. So we'll see, but these are really the two main levels we're looking at over the next like 3 or 4 weeks. 5628 or so, because this band will move with the rest of the market. And then it would be this 5422.90 level. So we'll call that 5425 and we'll call this 5625. So really we're looking at anywhere from 100 to 300 points of downside. And then if we were talking about the upside, well, then we would have to see some sort of catalyst to show that things are much more positive than we had hoped, because we've got these two red candles here, and that's really going to be a damper on this market. I mean, again, even here we saw 2 red candles, 3 red candles, and we just saw some sideways action before that, and we've kind of experienced a similar pattern where we're at now. So again, no bias here. This is just me looking at the chart and saying, this is where it looks like things could go. That's it. All right. So yeah, missile attacks, it's important to someone. It's not important to the grand scheme of the market, unless there's some thing that brings us into the war as far as the USA. And then you could start seeing maybe the Dow Jones Industrials rallying and things of that nature. But for now, this is just something to get people excited about. It really shouldn't move the needle too much. Okay. All right. So that's going to conclude our episode today. I hope everybody enjoyed it. If there's a stock that you'd like me to cover and go over and just ramble about to the point of nausea, just let me know in the comments or send me a message. I don't know how you'd send me a message, but you'll find a way if you really want to send me a message, I guess. Yeah, so I'm Kry. This is Kry Finance, where I just ramble about the markets and talk about the news and things of that nature. Hopefully I can make you some money. And, if something I say makes you some money, well, hey, that's pretty cool. Hopefully you can buy yourself not for yourself, but buy your dog like a biscuit or something, or a nice toy that squeaks that can really distract you from things, and that would be nice. So yeah, or if you feel like you want to, you could always just throw me a bone too, through some internet high fives, whatever that means. But in any case, I'm Kry. This is Kry Finance. Like, subscribe, comment, interact. Have a good day. I'll be back tomorrow. This is Kry, signing off.